Good morning, everyone. Thank you for joining us. My name is Sonika. I'm a Senior Solution Center Specialist at Mpowered, and I'm going to be presenting our webinar today titled A Deep Dive into ESD. Okay, Enterprise and Supplier Development. As we all know, ESD is a priority element. This means that you have to achieve 40% of the total points available for each of the three parts of the element, excluding the bonus points, to avoid discounting. Discounting, of course, means that your overall level drops with one level. For clarity, this means that for procurement, you need to score 10.8 points, for enterprise development, 2 points, and for supplier development, 4 points. So this is the scorecard for preferential procurement. I'm not going to go through this now, as I'm assuming you're all familiar with it, and you can see this in the codes as well. So let's look at some key principles. Procurement basically measures your purchases from BE compliant suppliers. So it is scored on the weighted spend with those suppliers based on their BE compliance as a percentage of your total measured procurement spend, or TMPS. When we say weighted spend, we're talking about the spend with the supplier weighted according to the procurement recognition level of that supplier and any other applicable enhancements. So for example, if you bought from a level 1 supplier, the recognition level is 135%. So if you spent 100 Rand, your weighted spend would be 135 Rand. Level 4 is 100%. So your weighted spend would be exactly what you spent with the supplier. And then level 8, 10%, and level 7, 50%. So I always think it's quite interesting to look at the big jump there and to see why it's really worth attempting to be a level 7, or rather purchasing from a level 7 than a level 8, because it's going to make a very big difference. Okay, the TMPS. There are so many questions about calculating the TMPS. The TMPS is calculated by adding all your expenses for the financial year. So your cost of sales, your operating expenditure, capital expenditure, finance cost. You could have other expenditures. Everything in there needs to be included. Then we're going to deduct any non-procurement items, such as your salaries, bad debts, and depreciation, or any items where the company has no choice in a service provider. So this is a non-exhaustive list. There's a long list of things that you could deduct, and it really depends on how your financials are structured and how your business records expenses. A tip to keep in mind is that your TMPS figure should be roughly the same as your total supply spend figure. And I would say that a 5% variance would be reasonable. So your TMPS can never be less than your total supply spend. It's usually slightly more. Some examples of things that we can exclude that people often aren't aware of would be your rates to municipalities, workmen's compensation, loss on sale of assets, loss on foreign exchange. And in the same breath, we have to keep in mind that if there was a profit on sale of assets or profit on foreign exchange, that actually needs to be added back. So some verification agencies don't do that. But if they're very strict and they're doing their job very properly, they should be doing that. Okay. Some more frequently asked questions and tips on your TMPS and your supplier spend. So people very often say, but finance charges are included at the top, they should be deducted at the bottom. It cannot be excluded at the bottom because your finance charges, you can select the supplier that you are spending with. So you can claim it under your supplier spend. Third party and pass-through procurement. So you can only claim a spend under the supplier in whose books the income is actually recorded. So a good example is a travel agent. So where your company is purchasing from a travel agent, flights, for example, let's say you're spending 10,000 Rand with the travel agent, about 5,000 might go to the travel agent and 5,000 to the airline. So you can only claim that 5,000 Rand against the travel agent's BE certificate. The cost of the flight should be claimed under the airline. And if it's too difficult to separate those expenses, then you should just leave out that other cost there. Taxes, so taxes or levies on your income statement can be deducted, and this is not your normal company tax because this is already excluded in your financials. Customs VAT, you cannot claim from your supplier, so a lot of people include this in their supplier spend, and then the supplier spend is way higher than the TMPS figure, and this is why you need to exclude it. Empowerment-related spend, so amounts contributed under ED, ST, and EST can be deducted from your TMPS as long as it is reflecting on your income statement and it's a direct cost or a grant. Intra and intergroup procurement, so if you're part of a group and you're part of a consolidation, intragroup procurement won't be considered at the consolidation level. So the consolidated BE certificate, because there are consolidated financial statements and that intragroup procurement has already been accounted in there. If, however, you are one of the entities in the group and you're getting verified on your own, intergroup procurement is claimed as a normal supplier spend. So when you're purchasing from a sister company, you would claim that under the BE certificate of that sister company. Okay, here's an example of a calculation for procurement. Let's say our TMPS is R1 million and we're spending with a supplier 200,000 Rand. Their credentials is a level 2, 51% black ownership, 31% black female ownership, and a 3-year contract. So the level 2, the recognition factor is 125%. So the 200,000 gets multiplied by 1.25. 51% black owned multiplied by 1.2. 3-year contract multiplied by 1.2. So your actual weighted spend ends up being 360,000. So that would count under your procurement spend from all empowering suppliers. It's not a QSE, so it won't count here. It's an EME, so it would count over here. It's 51% black owned, so it would count over here. And it's also black female owned, so it would count here. So you can see that that weighted spend is being recognized under various indicators. If we look at the amendments from December 2019, there's a distinction made between the flow-through principle and modified flow-through principle for black ownership. For your spend with 51% black owned suppliers, both count. So direct flow through or modified flow through 51% would count in that indicator. Spend with a black-owned generic company can be recognized under the spend target for EME and QSE entities if the supplier was an EME or QSE when you started procuring from them. The supplier is 51% black-owned using only the modified flow-through principle, so no enhancement. And this would be valid for a period of 5 years from when you started procuring from the supplier. So that's where the distinction comes in between flow-through and modified flow-through. Okay, under the amendments, the definition for black designated group has also been clarified. So it is now clear that the supplier has to be owned by 51% by a black designated group. So a supplier that is 51% black owned and only, let's say, 20% of that is a designated group, that would not qualify. So there's a clear emphasis on black owned in the amendments. The points have increased from 9 to 11 and the target from 40% to 50%. The enhanced recognition factor of 1.2. So again, we can see here, it is applied to companies that are 51% black owned using only the flow-through principle. Also a black-owned QSE or EME with a 3-year contract, and then a supplier that is a supplier development beneficiary with a 3-year contract. Okay, another question which comes up a lot with our TMPS calculation is when can imports be excluded from TMPS? So you can exclude imported capital goods or components for value-added production in SA, provided that there's no local production and importing promotes value-added production in South Africa. Then you can exclude that. So if you're importing a part or something that goes into the product that you manufacture and you use it in your manufacturing process in South Africa, and you can't obtain it in South Africa, then you can exclude it from your TMPS. Other imports, so it's not a capital good or component, it's not going to undergo further value-added production in South Africa. Other imports can be excluded where there's no local production, and the company has developed and implemented an enterprise and supply development plan, often called a localization plan, which should include clear objectives, priority interventions, key performance indicators, and a concise implementation plan with clearly articulated milestones. So in other words, if you're importing something where it's not a component, there's no value-added production in South Africa, that is fine as long as you have your plan in place. And we can see as well that the codes say implemented. So you must have taken a step in that plan in the measurement period or before you have your verification done. If we look at the Preferential Procurement Policy Framework Act, this act provides for the implementation of a procurement policy for a category of preference in awarding contracts and for the protection or advancement of persons or categories of persons disadvantaged by unfair discrimination. The idea is that one bid will be preferred over others because it meets or it exceeds specific criteria. A fundamental assumption of this is that the state is prepared to pay a premium to achieve transformation. So tenders would generally work on an 80-20 split or a 90-10 split, where the 20 or 10 points would relate to your BE level and the first half to the price. So obviously, to increase your likelihood of being awarded these tenders, you really need to focus on your BE compliance and make sure that you're maximizing that score out of 20 or 10. Okay, moving on to the supplier and the enterprise development part of ESD. There we have our scorecard again, which I'm not going to go through in detail. So as we know, enterprise development, supplier development, it measures support to Black-owned smaller businesses. So only a 51% Black-owned EME or a QSE would qualify as a beneficiary. However, generic entities can qualify if they were an EME or QSE at the time when you started assisting them. They are 51% Black-owned using the flow-through principle, so not the modified flow-through principle, and it's valid for 5 years from the first date of assistance. So this is why you will see in the BEE toolkit, you need to indicate what was the size of the company when you started assisting them, what was the Black ownership, and what was the date of first assistance. So if you're wondering why you need to enter all that information, it is for this calculation. A supply development beneficiary has to be on the measured entity supply chain, whereas an enterprise development beneficiary must not be on your supply chain. I cannot emphasize this enough. Okay, contributions cannot be double counted, obviously. And your points available from shorter payment periods or early payment is limited to 1.5 points. So 15% of the total 10 points available. Your score is calculated based on your contribution amount multiplied by the benefit factor which we will look at just now, as a percentage of your net profit after tax. Should your company's profit margins fall below a quarter of the industry norm over the last year, an indicative profit will be determined. So if you have made a small profit or you've made a loss, don't think that that necessarily means that you will have a very small target, because it could mean that the industry norm will be applied to you. How do we determine the indicative profit? Basically, the first step is you would determine the industry in which your company operates, and you would select that industry on the BE toolkit under the General tab. The company's profit margin for the financial year will then be compared to the average profit margin for the industry that you've selected over the last 4 quarters. If the company's profit margin exceeds a quarter of the industry norm, your company's net profit after tax will be used to calculate your targets of 2% and 1% for enterprise and supply development. If, however, your company's profit margin is less than a quarter of the industry norm, the profit margin for the last 5 years will be looked at. And if this is still less than the industry norm is going to be used to calculate your target. So these are the benefit factors that I was talking about just now. So as you can see, not all contributions will give you the same points. If you give a grant or a direct cost, it's going to be recognized at 100%, whereas an interest-free loan, for example, would be recognized at 70% of the loan amount, and a standard loan at only 50% of the loan amount. So you need to keep this in mind when planning your contributions. Okay, some questions that we have had for enterprise and supply development. A loan. We all know that companies like to give loans for this indicator. How long can a loan be in place before it becomes perceived as a grant? So how long can you claim that loan that you've given to the beneficiary? I think here you need to keep in mind the intention behind it, the ethics. I would say that 3 years is a reasonable period to claim an outstanding loan amount. 5 years, maybe, that is often applied, but this is something that you should confirm with your verification agency, because at the end of the day, they are issuing your certificate. Can a loan be converted to a grant after a few years and then claimed as a grant within that financial year? So I feel like this really ties in with our first question. And again, it is an interpretational issue. We need to look at the intention behind it, but there is nothing in the codes which prevents this. Again, ask your verification agency. If a loan is granted in one financial year for supplier development, but in the next year the beneficiary is no longer a supplier, can the loan still be claimed as a supply development loan? I would say that in the first year, obviously, you claim it as a supply development loan, but in the next year, claim it under enterprise development. But obviously, if that beneficiary then becomes a supplier again, you can't claim graduation because they started off as a supplier. A lot of people also ask, can you claim for the same supply development beneficiary year on year? Yes, you can, as long as it is a new contribution or an outstanding loan and not the same contribution, obviously. And you need to keep in mind getting new enterprise development beneficiaries so that you can get the bonus point for graduation. Basic evidence that your verification agency would ask for. For procurement, you will have to provide your detailed ledger reflecting the total spend equal to your claim. They will select invoices which they need to tie up to the ledger, and you would need to provide the BE certificate or affidavit for every sampled supplier. Very important is to check that the VAT number and the registration number on the certificate or affidavit is the same as on the invoice. That is how your verification agency will link it. Where you've claimed any enhancements, for example, that you have a 3-year contract with the supplier, you need to provide that 3-year contract. Imports, you would also need to provide ledgers and invoices. You would have to have a letter from your procurement manager declaring the reasons for the imports or exclusions. And then obviously a copy of your localization plan where you need it for your imports. Supply development and enterprise development. You need an agreement signed and dated by both parties, clearly setting out the nature of the contribution. So it needs to specify what the contribution is and also confirm the amount of the contribution. Proof of your contribution, so invoices, proof of payments, and then obviously your BE certificate or affidavit for the beneficiary. A signed and dated confirmation letter from the beneficiary. This should also confirm the nature of the contribution and the amount. Proof of graduation, where you've claimed that, and then proof of job creation, where that was claimed. The proof of job creation would usually take the form of an affidavit from the beneficiary. Okay, so that is our presentation for today's webinar. Do we have any questions? Okay, supply development, is it also valid for 5 years since inception? Yes. You can claim the same supply development beneficiary year on year for a lot of years. And then the loan, yes, if you've done a loan, I would say not longer than 5 years, you can claim that. But as I always say, you really need to confirm this with your verification agency. They are the ones signing off the certificate. They're taking responsibility for it. So you need to be sure that they are happy. So if you've given a contribution to a beneficiary under supply development, and they're no longer your supplier, let's say you've given a loan, you can still claim that loan while it is outstanding, but it would just be claimed under enterprise development and no longer supply development. Why is a contract a 3-year contract? Does any shorter contract count? No, unfortunately not. It has to be a 3-year contract. And I mean, the intention there is obviously that you enter into an agreement with the supplier that you will use them for quite a long period. That's why they're attaching that 3-year contract. So I had someone asking the other day, if the normal payment terms with a supplier is cash on delivery, and they pay them within the 15 days, can they claim that as shorter payment periods? So I understand where that question is coming from, but no, you can't, because even for shorter payment periods, remember the intention behind it. And for enterprise and supplier development, you need a signed agreement. So if you're going to ask that supplier to give you a signed agreement saying, we're going to pay you early to facilitate cash flow in your business, then, and the terms are usually cash on delivery, it doesn't really make sense. So always just keep in mind the intention when you are thinking about whether something would qualify. And if it seems wrong, it probably is wrong. How would one prove time of employees assisting to claim the benefit factor? For example, my role as procurement manager includes assisting these beneficiaries, but activities or time allocation per month isn't necessarily defined. Okay, that is a good question, Avesh. So you really would have to then keep a log of the time that you spend. Similar to under skills development, where you would have an attendance register or a log of training, you would have to have some form of a record. And maybe, to be extra safe, you could get the beneficiary to sign it off for you once a month or something like that. But yeah, keep a record of the date and the number of hours that you spend on that day. Because You will have to prove that to your verification agency. Sometimes verification agencies will accept if you say that you spend 20%, or let's say I spend 50% of my time assisting beneficiaries. Sometimes verification agencies would accept an affidavit confirming that without an actual log. But again, it would depend. So maybe just confirm with your verification agency. They all have their own level of strictness and their own requirements. Okay, so thank you for joining us today. Hope you have a lovely weekend. Stay safe, everyone.